The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Paddy and Steve in alphabetical order. Well done, guys. Thanks for turning up. That's good, yes. Peter is not here. He is not here at all. He's in the span here. There. Oh.
To be fair, I did get invited on this holiday, but I said I'd probably be busy. Ironically, I've got no work on at the moment, so I could have gone. Never mind.
Well, is he there on holiday? It's not holiday, he's working, isn't he?
Yeah, he says
it's
that.
a working holiday,
Yeah, a working holiday. How does that fit together? Working holiday. In fact, saying that, I've just been to Centre Parks, and I recorded 6 interviews with companies, so mine was a working holiday as well. And to be fair, I quite liked it, working while the kids are going down the rapids, not dragging me down the rapids, you know what I'm saying? So, come on, Dan, let's go down the rapids. I'm 52. All that kind of rapid stuff, doesn't bother me. And the slides in, all that stuff, And these big sort of 4-seater slides, on these big inflatable things, they drop down, and they ask you if you want a theme, so they can change the lights and the water inside the dome, When you go down, me and Megan went on one, she said, what theme would you like? I said, I don't care, I'm 52.
Oh, see, I'd care about that.
She looked at me like, why are you doing this then? It's like, come on, I don't need a theme. You don't really notice anyway. There's water splashing in your face and they've got different kind of lights in the tube, I thought, who cares? I'm 52, love. Couple of lights and that, it's not going to bother me. Really doesn't care. Don't care.
Sounds right up my street.
Yeah. Have you ever been, Pad and Pete, to Centre Park?
No.
It's not really somewhere you go about kids, is it?
No, I was saying that. We said, Megan, I said, because it's a family thing, isn't it? If you got a single guy on his own check-in, would the red flags go up, do you think, at the reception desk when you drive in? I think they would, wouldn't they? You think, there's a single guy there, just going to Centre Parks on his own. Really odd.
It's weird how they spell it as well, isn't it?
Yeah, Centre. Well, did it start in France? Centre.
No, I don't think so.
No, Centre's right, isn't it? But Parks aren't. I don't know. Maybe it's, I don't know.
No.
But it's good.
It's ER and C.
Yeah.
Both are wrong.
Yeah, but it is good there for kids. Kids love it. I mean, luckily this time we took a friend of Fred's, so the kids you can let them go, and you forget about them for a while. And I gotta say, at one point I felt a bit left out. It's like, normally it's Molly saying, Dad, come on the rapids, because they had a friend with them. They didn't ask me, pretty much. It didn't even bother with me. I thought, hang on, it's okay. And part of me thinks, when you were dragged down there, didn't want to do it. But now I wasn't even asked. Okay, so I ended up going down the rapids and Megan a couple of times, and the kids. But I mean, think, I'm left out a bit here. And you realise, actually, the hassle you think you have with kids, having to do things with them, you miss it a bit when they don't ask you, that kind of joining in stuff. You do miss that a little bit. What I don't miss is a family of 4, their feet and knees going your back down the rapids. Just back off a little bit, yeah? It's just too close, all these people around you in water. And it gets to the stage where I just think, in that water, all you've got, basically, is pubes and skin. That's all there's in there.
Oh, wonderful. Is that what they call it?
Yeah, the pubes and skin rapids.
Is that the theme? One of the themes?
Yeah, what theme do you want? The pubes and skin, please.
Magical.
Yeah, we don't have that one, sorry, sir. Oh, okay. Because that's what it reminds me of.
I wonder what would happen in that. Would that everything go like hair would come out the side of the slide?
Yeah, just a little, the man throws a bucket of dirty skin over you. But do you enjoy it, fella? Not really. Yeah, but no, it is good though, because it's owned by a private equity company. I'm just thinking, because you literally, there's dog lodges, right? Because we take the dog with us, because, we're not supposed to let her off, but we do. She loves it, the forest. Forest she loves. Do you know why she loves the forest? Because she's a little dog, and she likes chasing things that will definitely run away from her, right? And 2 of those things are rabbits and squirrels. They never fail to run away from her. Sometimes the odd cat will stand up to her and she'll be scared by it. It won't bother. Oh, but cats. She always wants to make sure a cat runs first, then she chases it. But squirrels and rabbits guaranteed to run away. She loves that. But the dog lodges, right? There's only a few of them, and they're so far away from the swimming pool. I smashed my steps every day. I was doing at least 15,000 steps a day, walking back and forth. They won't even allow you on the little train to go on the park with a dog. So literally, if you've got a dog and you want to go to Centre Parks and you're not fit or you don't walk for it, it's a killer. It's an absolute killer. But so there's a bit of dogism there, and I think you should have. Why don't dogs be allowed closer to the centre of it? Yeah, doggers. Well, exactly. But but you've been, Steve, haven't you? Or have you not?
No, I went to the Forest of Dean one for a 40th. We had a couple of cabins with friends, but we did it out of season, so there's no one there but us, pretty much.
Yeah, okay.
So you have been?
Well, no, I went to Forest of Dean. That's not Centre Parks.
Oh, right.
What do you mean you went to the Forest of Dean? But that's a forest.
It's just a forest. We went to yeah, we went into forests.
Oh, I thought you were talking about Centre Parks in general.
Centre Parks? But it's like saying, have you ever been to Spain? No, but I've had a tortilla wrap once. That was quite nice. So, okay, right. I've literally, I've been to the forest. Does that count? Yeah. There we are. But do you know what? It's almost like when you... In fact, do you know what I did before we get to stocks and shares? And the market's turning a little bit. Some of my stocks are doing, relatively well. In fact, I bagged on one. And,
What?
Yes. Let me just see where my thing is. My puff. So Seta, I mentioned to you a couple of times. I'm up I'm up in that. 127% in that.
Oh, well done.
Yeah, because you get a lot of companies now, microcaps, oversold. But anyway, before we get to stocks and shares, do you know what annoys me at the moment? A while back I used to get on, and I used to think with digital TV and on-demand TV and all these boxes and iPlayer and all that stuff and Netflix, I thought they served to you, what you want to look at based on what you watched and liked before. That's what I thought they did. And I kept getting recommendations for drag queen shows on BBC. And I thought, if anything, that's the least, I hate drag queen shows. I don't see the point of it. I do not see the point. And they're pushing it at me all the time. Go on, give it a go. What's this RuPaul's drag queen thing?
I'm just gonna throw it out there. Maybe Megan's using your account as well.
No, she was like drag queens. That's the point of it. It's absolute nonsense.
Monty?
It's Fred. It's definitely Fred.
Yeah. So I thought, get it off. And part of me said, I'm going to stop paying the BBC licence fee because it's giving me this nonsense. I do want to see blokes wearing too much makeup, stupid clothes, pretending to be entertaining. It's not at all. I don't find it.
They literally make one programme like that. It's not like there's thousands of them.
They stop promoting it to me. And now, do you know what's happening, which is really annoying me, is the coronation. They're all talking about the coronation.
Don't get me started.
I thought, do you know what? I don't care. The royal family, I know Pete's not here, he's a bit of a royalist, he would provide a bit of support. But all I'm saying now is, what do you need to know about the coronation? What? I don't. It's a man put on a hat. I don't want. It's like Sky said this on Twitter. I said, "Do you have any questions regarding the coronation? Like we should all get excited about it, And I said, yes. We are experiencing 40-year high inflation. People are struggling to pay their heating bills and or buy food. So why should we care about an entitled old man putting a very expensive hat on his head? To me, that's what it is. It's as bad as a drag queen competition where these guys fluffing it up and thinking, you're an old man putting a crown on your head. Why are you making a big deal? Grow up, move on. I just find
To be fair, he is not that... to Charles, he's actually not keen on doing it at all. But he obviously has to do it because he's not really into all that kind of stuff.
Well, if he wants to, he's a king. Put his foot down. Say, I'm not.
I
don't mind having.
It's a big payday, though, isn't it? It's a big payday.
Yeah, but you say I don't mind having the privileges and the money, but I'm not doing that fancy dress stuff, But we'll just say that I'm the king. I'm the king. Even that ridiculous concept now, the king. It's like
I think the
Disney.
powers by be of the royal family are bigger than him, to be honest with you.
Oh, he's the power, isn't he? Who's the power? Who's the behind it then? I don't understand. Just say, I'm not doing this fancy dress stuff.
Just do a Zoom one.
Yeah, exactly. Just chuck it on your head. Even back, do a Zoom one and use one of those virtual crowns. You get anyone to put on their heads. Like, ooh, I'm the king. But I just find it completely ridiculous and absurd. Absolutely irrelevant. Please, All TV channels, stop pushing that at me. I can't think of anything less relevant in my life than an old man putting a fancy hat on. And us having to join in. Ooh, it's brilliant, isn't it? New king. No, it's not. It's not.
Just don't watch it, mate. Just yeah.
So maybe have a couple of drinks and just enjoy the day off.
Yeah, but everywhere I go, it's like you've seen it on every day. For weeks now, the BBC have been sneaking it into the end of, broadcasts for the coronation. I don't care, please. And what it does, though, all it does is basically put them on mainstream TV all the time, and it basically builds up their part to become, keep them famous, keep them relevant in that respect, and then all the brain deads go along and hanging over the railing. And he waves at them, and they're pleased. Oh, he waved at me. They are brainwashed, but I'm surprised how, because they haven't got a brain. They're nuts. Drive me insane. Why do you want to do that? Just go and stand there with a load of unwashed, waving. Kings, I got it wrong.
I was thinking about going.
Were you going to go? Is it happening in Cardiff?
No, I'm not.
Well, in fact, that's one of the questions.
He's not the Prince of Wales anymore, is he? He's stopped that. He's
no, he's just handed it over to his son now. You can be the a lot of Welsh.
Will you go to that? You go to the crowning of him. I'd imagine that'd be a big day in Wales.
Yeah, well, that was no longer.
Does that actually happen? I'm not sure if that's an actual crowning situation, is it?
Why do we sit back and just? Why do we accept that though? I mean, a lot of Welsh nationalists were hating that, weren't they? How the hell is he now the Prince of Wales? There's no vote on this by the Welsh people at all. He just assumes he's now the Prince of Wales. All he does is get the royal box in the Principality Stadium, go see all the good games when he wants to, and pretend he supports someone that is in line with the Welsh people. But here we are. But yeah, you can see I'm bloody annoyed with it, really. Bloody annoyed.
What should the qualifications be to be Prince of Wales then?
It shouldn't be. There shouldn't be a Prince of Wales. We've gone beyond that now. We're more modern than that.
Who is the modern day Prince of Wales then?
Well, Tom Jones should be there, I think.
Tom Jones,
definitely. And he has got a regal, the voice. He can actually. That's what you want is a king of Wales who can stand up and sing. That is worth going to watch. A bit of a set on. What's Charles just sits there, mumbles away, gets his hat on. At least Tom could sing. That's something worth watching, wouldn't it? Anyway. Who would you like to see as a Prince of Wales, Steve? Who was the younger version like Tom Jones, I think? Or Princess of Wales? What would that be?
Charlotte Church.
Charlotte Church and Tom Jones.
Yeah.
What a
teaming up.
What a pair. There have to be other. What about that weather lady, Sean?
Yeah, Derek the weatherman.
Yeah, that's how relevant it is. Literally, Sean. That's going back a bit, isn't it? She now does. Derek. Do you know Derek Brockway, Pad?
No.
See, you don't see Derek.
He's famous in Wales.
Is it odd, Steve? Derek is like he's a weatherman in Wales on BBC Wales, but he's like he's a lovely looking. I met him a couple of times, but he's a lovely guy. Here we are, and I think he's married, Steve. Is he? Let's put it that way.
Yeah, he's definitely he's married. Yeah.
Oh, is he? He has got a partner, is he?
He's got a wife, yeah.
What?
I know, surprising, isn't it?
He hasn't got a wife.
I'm serious, he has.
No. Anyway, because he's quite camp, Pad, but he's a lovely fella. And in fact, when I did a quiz show once on BBC Radio Wales, he was one of the guests on there. He's really nice. But he does walking with the Weatherman. He does like TV shows like that. He just was walking around Wales and they film him. Amazing concept. It's just like, and Sean Lloyd came in once, and he often gets some celebrities to walk with him because I assume he gets a bit lonely.
Other weather people, or just
anyone who wants to walk around the hills, with him in horrible weather and look at things in the distance and birds and stuff. So it's a full show. He had a couple of series of this, I think. Steve, haven't he? It's not a one-off, is it?
It's actually quite a good series, actually. I do like a walking programme.
Yeah, Walking Weatherman is called. Is the Weatherman walking? Is that
Walking Weatherman?
Who's the other one? The really, really camp one. He plays drums.
Oh yeah, that's yeah.
Oh wait,
Owen, yeah.
He's done well, hasn't he? Since that, he really picked up. Did he start in COVID or something? He'd drum in, and then all of a sudden, they really picked him up.
He's on Radio 2 Early Breakfast now, isn't he?
Is he? Yeah.
Yeah, he does it from Cardiff.
Yeah. Okay.
Well, and why not? Why not?
Anyway, yes, Derek Brockway is literally he's probably a prince in Wales, but he's not very well known outside Wales. Unless it's funny how you can be famous in Wales, isn't it? Really, but that's it. You'd think that there's no border there in response. Because I think he follows me actually on Twitter, but there we are. Anyway, so stock markets, Steve, have you been looked at any of your shares or anything like that recently? Anything happening? Anything good? I assume you pay attention to my. I send out regular emails now to the membership club about if I'm buying or selling and all that stuff. Do you ever read any of those guys or not?
Oh, I told you I've stopped investing, so there's no point really, is it?
It entirely stopped, or have you?
Yeah,
really?
Yeah, completely stopped.
You haven't stopped investing, have you?
Well, no, I'm just putting my money in funds now, so I'm not doing AIMs or anything. Well, in fact, I'm not doing anything other than funds. So
you got rid of all of it?
I haven't got rid of it. I'm going to sit on some of them to wait until they come back, hopefully. But
right. So you are still... I'm
still invested, yeah, but I'm not doing anything with them, effectively. So there's no point.
He's changed. When Steve used to be a deep researcher pad and very active in trade on data, now he doesn't do that so much. Yeah, he doesn't do that so much now. He's more passive. It's pretty much Steve, in the same position you were literally several months ago. Nothing's changed apart from your head said, no, I'm not. So how many stocks do you hold, Steve, at the moment?
32.
It's about 12, probably less than that actually. Thereabouts.
What are they?
Well, I don't know. Hang on, look at my portfolio now.
Maybe this is the problem. You don't know what they are.
The only one I know it's a bad egg in there is Gfinity. But
had a rally today, Steve. But I mean, we're talking. Really? We're talking from a low. It's in fact the chart on this literally is so flat.
You say it rallied 4%.
No, so flat. Oh, in fact, yesterday it went up by. Yesterday, I did put an alert on it, and it broke a previous high today. So yesterday it went up by sort of 9%. Today it went up by 4%. So, but we are talking. Even on my chart, it doesn't really, make a mark at all. They're all flat.
Yeah, well, I'm still minus 93% down on that. So that's.
You'll make it back, Steve, soon.
I'm minus 97% down. So,
but do you know what? I'm not suggesting this. If people. If you're losing, some people say you should average down, bring the average cost down of your purchase in the rally. But unless in my mind, unless you're super confident on a business, and that means in my mind, unless it's a predictable business with increasing revenue and earnings, then that's fine. But and there's a valuation there based on profit, and so it's got cash, no debt. But as I say, with GFIN, it may have a technical rally because what you see at the moment, the market is on the turn a little bit. There's some micro caps rallying quite strongly, and they are bouncing off really oversold levels. That means in a bear market, it can be more brutal than you think. It's like being attacked by a bear, getting up and limping away, and then it
in the market.
Bear market, and it attacking you and coming again and ripping your legs off. And that's all right, that's done now, that's all right. And then it comes back again and pulls your arm off. And oh my God, can it get any worse? That's a bear market. You keep going down further and further beyond, but we are bouncing. I mean, even the indices, are looking a lot better. They're off their lows.
Sure, but in something like that, like what is the short, medium term outlook there? They're still an operating company, right? They're still doing things.
Yeah, I mean, and their revenue is just at the moment. Let's go back to the last sort of figures. But so if you look at the most important thing for micro caps and small cap companies, right? First and foremost is cash. Do they have cash? If they're loss making, they've got to have cash. That's the most important thing of all. And if they're making a loss, then okay, how long is their runway? And like I said, if I'm looking at companies I think have excellent potential, micro caps, then they've got to have at least a 12-month runway of cash. And in that time, I assume that stock markets will be higher anyway from here. And if they need to raise money, it'll be a bit more liquid. There'll be money pouring into the market. Whereas, in a bear market, it's the opposite. If they need to raise money in a bear market, you're in big trouble. Big trouble because no one wants to loan you money. And so to get loan money, you have to do it on very horrible terms. But I mean, if you look at their revenue for half-year results, they were 4.1 million. Adjusted operating loss, I don't know how much that's been adjusted by 800,000. So period end cash 1.7, and they also raised 2 million with warrants. There's trouble to see with Chief, and they've raised it with warrants. So what's going to happen is every time it rises, people make cash in the warrants, or sell the warrants. So how much operating loss for 6 months. Well, in fact, the operating loss, I like the way they adjusted it, because the operating loss is 1.9 pretty much million. And so you can see, on current cash burn, you think, well, how long is that 2-3 million going to last? So that's why SETA, they've got this in-drive technology, axial flow drive, which is for EVs, cars, and all that. They've done a big contract in America. They've done a big contract in India. That was massively oversold. They were valued at 20 million market cap. They had 11 million of cash, and they said these contracts now were taken to almost breaking even, so they had over 12 months worth of cash, and it was, massively oversold. This was IPO'd set at 125, and what did I buy them at? Let me just look at the chart. Set, so that's the thing that, if you got cash in these times, 125, they listed that. I started buying them at about 20, I think 21, 22 pence, 23 pence. And now they're 63 pence. So.
Well done.
Yeah.
But yeah, that's the problem, isn't it? You don't have the cash in these. That is unfortunately the counterintuitive of it.
Yeah. Well, do you know what? It'll happen again, right? I see this bull market not coming back quickly. You may have some decent rallies, but as long as inflation numbers from America, CPI core inflation is coming down nicely. In UK yet to be seen, but unless that comes down, then there's not going to be a massive inrush. So I think we'll trade in a range. I think we'll trade, certain stocks or industries will get a bit expensive, and it'll sell off again. Then you have a rally again. And I did say on Twitter a while back, say what you'll have is a trading range. Whereas it'll hit the top of the range and the bulls will be saying, yes, bull market back on. And they'll probably come back down to the bottom of the range and the bears will say, oh, we're going to new lows. And I don't think that'll happen. I think it'll be up and down like that for a while until, there's definite evidence there's a trend of inflation coming down. And so the cost of capital then gets, obviously, interest rates come down, all that stuff. Cost of capital gets money inflow into the markets. And then once you get a money inflow again, it's like the rains after a drought. When the drought happens, you think, how long will this last? I saw a documentary once in Australia about droughts. And I thought, bloody, that's awful. Why do you actually live there? And there's a farmer in the middle of, Australia, obviously a huge place. They hadn't seen rain for I don't know how long it was. It's like 3 seasons. And I thought, well, how are you surviving? And then all of a sudden they did have rain, and it rained for like a solid month and a half or something ridiculous, But
too much rain, too much of anything.
Yeah. So it's a bit like that, the stock market.
So if you were to buy into Gfinity now, you could bag relatively easily.
Maybe, yes, but I think at the moment on a technical level, it'll be. But I genuinely see better opportunities out there at the moment because, like I said, they're going through a change of management, and I think they changed the model a little bit. So, in my mind, as a trader, but even when I'm looking at micro caps, I want to invest in companies that have decent long-term potential, and as yet, I don't know.
Does it have decent short-term potential?
Yeah, well, it's put it this way.
As someone who's 97% down in it, am I going to get any of that back at any stage?
You could do. When someone starts, we're now seeing the relative strength index tick up. Look at that. So relative strength is about momentum and movement, basically. But below 30, it's called oversold, right? It went down to 9 on Gfinity.
Yeah.
And for a while, I've been looking at stocks like that have been massively oversold, but they almost have as much cash as their market cap. If they have that, and literally that cash will last over a year, then, and a decent potential for the company, then you're going to see a rally. And that's happened in quite a few companies I've invested in recently. But I still have, and at the moment, like I said, I believed in G50 for a while, maybe a bit blinded at some point because, it was in esports and all this stuff. But now they're changing their model a bit to this, Athlos gaming technology and the digital media side. I don't know if they're that concerned about that. I think they should concentrate on one thing. I know the digital media gives them revenue and esports solution gives them revenue, but maybe they should go with one thing. I don't know what it is, but maybe it's not digital media because you've got to have a big. Digital media, basically, you've got to have a lot of sites. Like, for example, the classic model here, a bigger company is Future PLC, you know, and they're a 1.2 billion market cap. They've been hit massively. It's a company, in fact, an alert on their chart today, but they've come down. They own, I don't know, hundreds and hundreds of websites, you know, and they're all they monetize them brilliantly because it's all within their sort of system, and of course they can cross sell to advertisers, many different brands. Now you've got to have scale to do that successfully, you know, the advertising model, and they do that, but I don't think GFIN would get that scale. Just on media sites, so they probably need to do something else. And esports solutions is not just supplying services to companies because the revenue is good, but there's no margin in it. So I think if it's Athlos Gaming is the thing, maybe that's the thing. So in my mind, I'm unsure. It's a trading, yes, but you know, in a bull market, if it starts to change, it'll start to rally. Like say, even GFIN, you know, with a CEO gone and then raising cash via not very nice, attractable way, digestible way for investors, and even that's rallying. So you can see small caps are rallying. So something's starting to happen in the markets here. So, and we have been in a bear market now for 18 months, which is pretty much, you know, a bit longer than almost. Remember that? When did we start there? 18 months. Get a chart. When did we start the bear market, Steve? You'll know this.
No, it slips my mind. I was thinking about it the other day, actually.
Yeah.
It feels like it's been going on forever, I've got to be honest. I don't feel like we've ever stepped out of it.
That's quite a wide timeline.
There's a brief month in the middle somewhere where it got good, and then... Yeah.
Hang on. Indices and commodities. All right, I'm just bringing up the spreadsheet. Sorry, guys. There we are. Let's look. So, a high date for AIM was the 6th of the 9th, 2021. So what day is that? September 2021. So we're not far off that. We're April, May, June, July, August, September. 5 months off that. It's 5 months off 2 years. So that's a long.
Really?
That's a long. Wow. That's a long bear market. You know. So how many months is that? 5 from what? 24. 18, 19 months. That's a long bear market. That's it was 585 days. That's long. Guys, honestly, when the market starts to turn, I don't think it'll be as aggressive as before. Like, if you look at the great financial crash, that was sort of fixed by central banks pumping money into the system, and shoring up the banks. So there's no problem here, everything's good, and all of a sudden it went from the banks are collapsing to they're not collapsing, everything's going to be fine. There wasn't a problem with inflation. Inflation is a lot stickier, isn't it? It's sticky-icky. And the central banks haven't got control of it. They can't control it like they could the great financial crash with banks. They can't just say, okay, we're just going to wipe out inflation now. They can't do that. In great financial crash, they could wipe away the worry of banks collapsing by supporting them and all that stuff. But they can't do that with inflation. That's why all they can do is rack up the interest rates. Let's put it up again. Let's see what's happening. And wait. And see if they've overdone it. And now people are starting to say, they have overdone it. We're probably going to go into a recession. But that's not a bad thing, right? Because a recession, every time the official recession is announced in history, the markets start to rally. That's the bottom. Because what's going to happen there is the recession's announced, central banks realise that they've gone a bit too far, they need to ease up a little bit and reduce interest rates to stimulate the economy, because the economy is going to grind down, and inevitably inflation will come down with the recession. I
look forward to that day.
Yeah, oh yeah. Well, otherwise you get stagflation. If you get rising prices and no growth, then that's dreadful. That's like... the worst two pains you can imagine.
Tory Britain.
Yes, Tory Britain, yeah. Is there anything... what do you think... I don't want to shoot off too much on politics, Pat, to get you going. But I think, in my mind, right, it's there for the Labour to win the election.
Oh,
right?
yeah.
It's there for... Literally, it's an open goal. Now, are they starting to make silly mistakes by doing those stupid adverts on Twitter about Rishi Sunak not putting away... sex offenders, kid sex offenders, whatever. I think, hang on, guys, that's stepped outside your remit a little bit. All you need to do is look a bit competent. If you start throwing, dirty tactics and all that, some people say, hang on a sec, what's going on here? Do you reckon they should be doing that? Because they wouldn't back down from it, would they?
Yeah, it seemed a bit clumsy to me. Yeah. But I read some analysis on this. I can't remember who was saying it, but someone was saying, I think maybe it was Alistair Campbell saying that that perhaps this was a shot across the bows to the Tories to say, like, if you're planning on doing lots of this against us during the election campaign, then we'll come for you and we'll do the same back. Because their whole ambition here is to make everyone forget that Sunak was also involved in all the previous Tory governments that have been failures, and that he's a fresh pair of hands on this, where actually he's completely complicit in all of the failures. So they do need to try and link him back to the failures rather than allow him to present himself as a competent, although equally failed politician. But yeah, I wouldn't want to see them doing that all the time. And it just didn't seem to be very clear on what they were like. Yeah, the Tories have completely screwed over the criminal justice system. And if the point you're trying to make is that the criminal justice system can't function because of all of the cuts and because of all of the terrible mistakes with the probation service and all the rest of it, then that's one thing. But to try and link it all back up, I mean, of course, Rishi Sunak doesn't think that, so it just seems a bit silly.
Yeah, I just think it's almost like in business. If you're doing something to earn money in some way, and you're good at something, and maybe different parts of the business aren't working, then it's like Labour should look at Tory and say and say what the people, what's the problem? What's the biggest problems we have that the Tories aren't addressing? At the moment, of course, they blame inflation and all that. That's a global issue, really. But there's other things. And come up with credible policies to address these issues, rather than just having a slang match on Twitter.
The problem is if they talk about policies too early, then the Tories will just either steal them or spend the next year rubbishing them. Like with the childcare thing, that was heavily hinted to be a major Labour policy for the next election, and the Tories came along and just stole it and just stuck it in the last budget. So they can't release too many policy ideas too early, because it gives them too much time to either shoot them down or steal them. So that will come.
But surely the first point of that, shooting it down, is a good test of the policy, isn't it? If it's a good policy, it's hard to shoot it down, I know.
But when you release a manifesto full of 20 pages of ideas, like some of them will fly and some of them won't, but there's not really the opposition or the government in this case don't get the chance to pick on one thing for several weeks and just completely ruin it. Like Corbyn's idea to give everyone free broadband. When you look at it now, that wasn't a terrible idea, really, but it just got communicated in a very bad way, and they were able to...
In comparison to everything, it sounds like a great idea now compared to what the government have done.
If you're thinking about increasing productivity and making sure that people can work from home, and that's actually a really smart idea now, but back then it just seemed a little bit nuts.
Yeah. So hang on. What about stocks a second, in the realm of politics?
Yeah.
How many stocks do you own now, bud? Because usually you're getting out and putting into funds. What's happening?
I didn't do that.
You've done that? Have you gone into funds?
No, I didn't. I'd said that, and then the minute I said that, everything went down. 1, 2, 3, 4, 5, 6, 7.
I think you should hold off, Pat, because I think it will be
it's too late
and you'll
now.
make more money in the stocks you're in now, and then once it's rallied, that's exactly what I'm doing. Is wait until they rally a little bit and then move to the funds.
You are right. What you're in danger of doing here, boys, right? Literally, is I know you're down on those stocks, but those small caps, micro cap stocks can do literally 50, 60, 70, 80%, 100% in a couple of weeks in the start of a bull market. Okay, now if you now put all that money you've got at the low of the market into a fund, that fund will do a lot less off the bounce. So
completely. So there's a few here, like Trufin and Trufin,
hold that,
completely level at, and that's fine, and that's my biggest holding. Got big hopes for them.
Listen, Trufin on several accounts, right? First of all, they're a stable business in oxygen, which is like long-term recurring revenues with councils, and more councils now. It seems like are increasing their spend because they're spending on infrastructure like EV charging, and they do this via oxygen platforms. You got things like that, and you got Virtus, which is very, very sensible, and you got things like Stargo just about to take off now. They literally now they're embedded into Lloyd's and Sage, and they're starting to increase. So that'll increase, and you got PlayStack releasing several games. So I would for things like that.
I'm excited about them.
Yeah, they could. I can't see it. Like I said, they were. I had James on the podcast a while back, and like I said, they what was it? It was an offer, wasn't it? I rejected it. So they were offered 26 million on its own just for oxygen. They turned it down. They said, why? They said, because it's just starting. And do you know what? It is like what's it called? Almost like a glacier or a snowball once they get going. And now they have visible visibility of a revenue over the next 3 to 5 years. I think it's like 80 to 90% of the companies they are contracted for 3 to 5 years. And they've hardly had any cancel their contracts. They just renew them. So all they have to do is keep adding, topping up the hopper, as it were. Do you know what a hopper is?
Yeah.
Bus.
Do you know what a hopper is, Steve?
Yes, those buses that take around cities, isn't it?
That's it.
Yeah, top it up.
Top up the bus, and even when they're full, just keep pushing people on.
No, I don't. What is it?
In fact, is it like one of those... in fact, I'm looking at it now. It's one of the things where... What is a hopper?
It's like a big bucket.
It's like a big bucket, yeah.
Raise into the sky, and then the gravity pulls down whatever's in it.
Yeah, and you just keep filling it up. It's like one of the funnel shaped.
It's a big funnel chute thing, yeah.
Yeah, all right. And at the bottom, it's grinding stuff up, or whatever it is. I don't know what it's doing at the bottom of it, but you just keep filling it up, and then it keeps churning out. So essentially, all they're doing is adding new contracts. There's very little cancellation from any of these councils, and they said the reason why they turned down, even though on a valuation basis, 26 million was a very good offer for it. There's no, because we know where this is going to be in 5 years' time, and it's going to be a lot bigger and better than where it is now, because everything is so predictable. So there's a backbone there in oxygen. Like Targa is only now.
Well, they would just spin any of these off themselves. Yeah,
probably. I mean, in the end, if you're an offer for like oxygen, because you'd want. There's a lot of companies who'd love to have oxygen there. They know they have. Imagine, Steve, you've got a business there. Your business, right? And you know exactly you're going to be earning 80% of what you're on this year over the next 3 to 5 years, right? So you've got that already locked in.
Guaranteed.
That's amazing. And all you have to do is keep adding to that. And you will keep adding to it because you are a number one in your market, and the councils already that use your system love it, and they think, right, so there's no chance of the people cancelling pretty much who are booked with you. All you got to keep doing is adding contracts, and it's all automated pretty much, so it's quite easy to do. But then you've got the high flyers, so that's incremental, nice, steady growth. And then you've got the high flyers at Targo and PlayStack. PlayStack, of course, are releasing lots of games in the next 2 years, so that'll bring in revenue. But one of the, sooner or later, I think one of these will be spun out, and it'll probably be like half the value of Trufin itself. So I don't think it's a loss.
Lovely. So that's definitely one to hold on to.
Yeah, absolutely. I mean, at the moment, it's you could say it's not. We're still early stages, but once these businesses start to fly, then it'll be rated a lot higher value, and they probably will sell one off, and then
it's just like a mini fund as well, right?
Yeah, exactly. You are right there, diversified across 4 companies. It's very, very good, very good. Oxygen, Stark, PlayStark, Virtus. What else do you hold then? Do you hold that, Steve?
Yes, I do.
Yes, good. Well, things like that. Yeah, keep it. That's still in my portfolio. I mean, my portfolio comes through a bit of change, but that's still in there. That's in my what's that in my? That's in my microcap.
I think I've got a bit of a chunky holding on that as well.
Yeah, there we are then.
I have. Actually, I'm only flat at the moment on that. I'm not even down on it.
Yeah, but you know what? It's hardly... Even the downturn, it didn't really take a massive hit. I mean, a little bit, but that's because largely the shareholder base is very steady. They've got institutional investors in there, and they probably won't have to raise again. And if they do, it doesn't matter because it wasn't never done at a discount because they've got plenty of supported big institutional holders there who are happy to add it for some more money, because they realise the longer term gain on this is very good. They've got that Norwegian or Scandinavian sort of funding there that basically hold for generations. They never sell. So they're the biggest shareholder of Trufin. But and you've also got institutional investors as well. So so that's a goodie. Anything else? It's literally it rallied from June 2020 up from like 16 pence up to what? Up to like 80 pence, and it's gone up and down pretty much, and it's at 66 now. So it's not done a lot, but I mean, I think once they start showing some growth there in Targo and PlayStack, they can really move. Yes. You went to say do you then? Go on. Mm-hmm.
What was the question?
Well, I don't know. Steve, you asked a question then, Steve, you?
Oh right, yeah. Go on.
I was just going to pass and say, are you still holding GTEC?
No, I'm not.
Oh, okay. You did have it up until recently, didn't you?
Yeah, I had 1% of it. There was a change of CEO there, and I just... Right, I've got these 3 rules I'm sticking to, right? That I probably... And no, I am sticking to them. And literally,
For 6 months?
No, well, we'll see. Well, listen, you've got to evolve, everyone evolves a little bit.
Absolutely.
But,
yeah.
But like I said, I've got this spreadsheet, right, where I have my portfolio here, right in front of me right now. And like I said, it's 5 different sections: big caps, mid caps, small caps, micro caps, and hope high potential stocks. And one of the rules is this, right? I can only hold, a maximum of 4 in each section. I can only hold a maximum of 20 stocks, okay? Now, if I'm transitioning...
Why have you chosen these numbers?
Because it's based on... percentage exposure. So I literally will not go above 3 to 5% initially, or depending on where they are. If they're a more safe company, 5%. But unless I start moving upwards, I want to average up in them. That'll give me plenty of spare funds to average up on companies. So I'll have cash as well. So literally, if I took out initial exposure values in every one of these sections, I'd still only been fully invested. In fact, 3% is but around about 50%. So then I will only then average up on companies that start performing, and those companies could do very, very well. And I've done it with, like I said, Saeta, averaging up. Every time I broke above 10% gain on it, I have averaged up a bit. And that way, you're more leveraged to winners and losers. But what I also do, if I want to, for example, right now, I have 5 companies, which is breaking a rule, in the micro-cap section, right? Now, I'm not allowed to sell. If I go above 20 stocks, I'm not above 20 stocks, but if I go above 20 stocks, I can't just sell from one section because another section is overloaded. I have to sell from within that section, because that means I will actually weigh up the pros and cons, first of all, of selling a company against buying another company, a very similar company, risk-reward profile-wise. In that, so for example, I've got XP Factory. I don't know if I mentioned the others before. In fact, there's a couple I can't mention because I've not given them a month's grace. But I've got 5 companies in there, Trufin's in there, XP Factory's in there, and 3 other companies are in there. Okay, now I've got one too many in there, and so I have to remove one of those. But that means I have to look at the companies in that sector, which I think all have very good upside potential. Then I have to whittle out the weakest one in that bunch, based on all different metrics, news, valuations, growth, all that stuff, momentum, all that. And that means, I'm sort of weighing up equally, companies as far as risk and reward is concerned. So I can't just sell, a big cap and load up on my micro caps. That ensures that I don't go overweight in one sector. So there are too many high potential stocks, at the expense of dividend-paying big stocks. So I'm trying to sort of diversify across different sectors and keep it even. Because do you know last month, I've had several grand in dividends. And that's nice. I mean, it's a slow way to make money, but it's a more consistent way. And over time, dividend compounding is very powerful. So even though I may see a microcap stock go up by 50, 100% or whatever, it may come down a bit, and so you've got to be careful. I'm not overloading on those microcap stocks. I've done before. I did that before in the bull market before. I did very well, but then on the downturn, you do equally as bad. And I think if I'd held a more diversified portfolio, I'd probably done a bit better because I'd still be collecting dividends off good companies, and that would stabilise my portfolio a bit. So it swings and roundabouts, isn't it?
Well, we'll see, won't we?
Yeah, we will see. Yeah.
When's the next downturn planned? 6 months?
No, listen, when you have a bear market that happens for 2 years, honestly, you will see certain companies will rally strongly for a while. Once money inflow, it's like the tide, it is like that. Once the tide starts coming in, you see the first wave come through, then it'll come back a bit, but it's come up the beach a bit further than the last one. Think, hang on, tide's coming in. And then, you've seen, where's that? Weston-super-Mare. I think I went there once. And there's this, have you seen how far the sea goes out? And then all of a sudden
I've never been.
Oh, you can
I've
walk
heard it's
out.
magical.
You walk over miles. Me, was it Gavin and Eggy, right?
Oh, Gavin.
Yeah, we went out there, right? And literally we went to go in the sea. But it's like 3 miles out. Right? So it doesn't matter, it's still out there. So we went and walked, we didn't realise it started to turn to mud, right? And we were up to our knees in mud. And I said, sod this. And it was like thick, almost clay mud. And then I turned around and said, go on, boys, we're not going to get the sea. It's too far out. Turned around, Egg and Gavin just throwing mud at each other, right? Really just throwing it. And then I joined in, and we were actually absolutely caked in mud. In Weston-super-Mare, we weren't staying there. So how the hell are we going to clear ourselves up? So we just sneaked into a caravan park and into the showers there. And there's only 2 cubicles. So me and Eggy running first, and Gavin was outside shivering. Literally, he looked like something from a monster from the deep. All you could see was eyeballs. And when he smiled, his teeth, because he was caked in mud. Even his hair was caked in mud. It was like an ancient way that the cavemen used to do, but stop being burning, They said, rather than using sun cream, they should cover themselves in mud. He was like that. He was like someone from a tribe from the Amazon. And so this bloke came in, who obviously, he was a caretaker, and he said, what are you doing? I said, sorry, we just, I'm in the shower. He said, you're not staying here? So sorry, me and Egg had already washed off, so we got out. He said, come on, out. And Gavin was standing there freezing, shivering. Come on, mate, look at me. He said, no, you're not a member here. You don't stay here. You can't use the shower. He said, I can't get in the car. Look at me. And so me and Egg was laughing because we were clean. And Gavin was talking to this guy. You couldn't see him. All you could see was his eyeballs, his teeth, pretty much. And he said, well, go on, hurry up then. And literally, the mud came off us. But anyway, tides. That's what I'm talking about. Back to tides. You know when you see the when you see the tides.
Hell of a tangent.
Yeah, you know when the tides coming in, and you see, you sit at the beach sometimes. Like if you're in Treco Bay in Porthcawl somewhere, and you put your sunbed out or your deck chair out, and all of a sudden, but 5 families, in front of you. The first wave starts to lap up to their feet, and they're about 100 yards or 20 yards down the beach. And they start moving their deck chairs up a bit. And it keeps coming. If every wave, it goes back a little bit, it goes back out, the next wave comes in. That's the way it happens with a bull market. It keeps coming in and coming in and coming in. And literally, you see the top of the market happens when your average Joe, your mates, are saying, the stock market's doing well, isn't it? And they start piling in right at the top. And that pushes even more money in, and you get the froth at the top of the market. And then people start investing in ape pictures for £1 million, and you realise that is stupid. And you realise that was the top of the market there. When you get stupid assets going nuts, and you think, that's not worth that. And we talked about it, didn't we? Those people, what were they, NFTs?
Oh, I bet they're enjoying their NFTs now.
Yeah. Who was that? Someone bought one, didn't it? Was it a pop star or something like that? Bought one for like $3 million. It's worth $2,000 now.
Yeah.
That is a heck of a
obviously.
lot.
So when the market starts to recover again, and then if China invades Taiwan, that's going to have some repercussions, isn't it?
Yeah, it's too far away, isn't it?
Taiwan or that happening?
Well, no, I mean Taiwan, geographically. Does people care or not? I don't know.
Well, quite a lot of stuff comes from there, doesn't it?
Yeah, massive implications on the economy.
Yeah, it will do, but it won't affect China's economy, will it, really?
I don't know if the world has the same reaction as it did against Russia. Then yeah.
No, I don't. No, well, yes, I suppose Taiwan. Hey, hang on a sec. In that case, so Taiwan
produces 90% of the planet's semiconductors.
Yes, so you need to invest in this will be the COVID moment. Okay, if that happens, it'll be the COVID moment. But testing companies went through the roof, and based on a hype. If you're investing in a semiconductor company, there's one over. I think it's one in the UK, based in Cardiff, Steve, isn't it? What's it called? It's a listed company.
Oh yeah,
the best one in the world. They're not going to be able to ramp up production to fill the hole.
It's not Cardiff. It's a Newport.
But no, but what I'm saying is, about all the prices will go up massively for semiconductors, and it literally, they'll be charged double, triple, whatever they charge. So all just on sentiment. I mean, everything will go up. There were COVID stocks that doubled, tripled overnight. We weren't even producing tests, or had no tests that the Department of Health had qualified yet to be used, and yet they weren't accredited anyway. But even their share price rose in sentiment. But yeah, so will it happen though? That happens a lot, doesn't they? I know it's flying over there and doing all these tests and stuff, pretending they're shooting Taiwan and stuff. But I don't know if it's going to happen, is it? I don't know. What's the gain for China there, really?
Well, this could be a very long answer. It's about sort of regional power, isn't it?
Yeah.
That's the quickest way of describing it.
Yeah, well, there's a semiconductor stock, actually, I'm looking at on... In fact, the ticker is called AWE, A-W-E. It's a mid-cap. Okay, that's worth okay. I've been looking at that for a while. In fact, the chart just broke above today. And I've been looking for a long time. The growth there is phenomenal. In fact, they're conductors and all this stuff. But, yeah, that's worth... In fact, they're at 120 now. They're just breaking... Oh! I think I looked yesterday, and the results. I'm waiting for the results. They're coming out this month. AWE. It's a very interesting company to look at. And if you look at them, they recommend the next. What's the semiconductors at the moment? The big ones. What's the big ones? AMD and all that. Nvidia, all that stuff. It's very impressive the growth they have. They're winning contracts all the time. But AWE, Alpha Wave, IP Group, it's called. It's worth checking out. So maybe that's and all you need is one stock like that, really. In fact, it's quite a big market cap though. It's still 812 million. So, but the growth is very impressive. Any other stocks you got, boys, Steve? GTech. Sorry, I said GTech.
I've got quite a lot of money here with them as well, so which is really annoying because they're quite, 60% down on them. So I'm hoping for a little rally off them at some point.
They can rally. They're in hydrogen. Listen, the reason why I got out of those, like I said, I had too many stocks in my sector there, and I just thought I think they're to value generation. It's going to take a while to they got government grant. No, but the new CEO is in charge of the other company. What's it called? ITM. The first listed sort of hydrogen power company. ITM. Graham Cooley. He should be able to do something there, hopefully. But I'm just thinking, do they have over 12 months of cash? I don't know if they do. How much cash do they have? Net cash. What? Oh, it's ITM. I was looking at ITM then, and it says net cash of 317 million. I thought it was GTech. They got cash. I thought it was GTech. What? 73 million? So, no, that's what I'm saying. I have to compare now. The way I've set it up. So, if I'm going to sell a company, I compare it with other companies in that sector, thinking which is better. So you got to weigh up why I'm selling. Is what I'm buying better than what I'm selling? And so I'm looking at like-for-like companies on a risk-reward basis, and then comparing them. So so revenue was up like 11% year on year, 2.7 million for the half year. This was a record order book, 4.8 million. Cash 4.3 million. How much did they burn there? Let's have a look. So the thing is, Graham Cooley operating loss of 1.2. Okay, Graham Cooley, Dr. Cooley, shouldn't have a problem raising money. 1.2 loss before tax. So what's that? 12 months they got. That was from September. So I don't know. They've got some government grant. One of the things we selected was government grant for half a million. But do you know what? There's a lot of hope and light behind it. I don't know if it's going to gain any traction revenue-wise. Hopefully,
well, they just need some news, don't they? They need something to say.
One of the things. I hope hyper-10 stocks. I don't know if have you looked at Destiny Pharma? I like that. I think it's going to. I think this is the kind of company that will go massive. I think once it starts to move, there's a lot of sentiment being knocked. And I said, at the moment, right, there's companies out there. I mean, in fact, during the bull market, there are companies out there, biopharma companies, with one asset going to phase 1 or had a particularly good phase 1 clinical trial, and they were valued at 100 million or something. Ridiculous, right? This is a company here with 2 assets now, completed phase 2, so the most important phase they're going to now is phase 3 before commercialisation. They just signed a deal on one with a company called Sabella Pharmaceuticals, worth up to 570 million in sales and royalties. They've got 1 million up front. But what's important is when a small company like that is taking their assets through trials, clinical trials are very expensive. They're hugely time-consuming and expensive. So what they've done, they've partnered on phase 3, and now they have no financial burden on taking this M3, I'll call it, the first asset, through phase 3 trials. Now, in the background, they've also got another asset going to phase 3. They're looking to partner on that. Now, what's good about that is that it's twice the market size, sales-wise, peak sales of this asset. So we're around $1 billion. And they wholly own it. So the other one, they bought the rights off it. So when they get a deal, they obviously have to pay the rights to someone else as well. But this one, XF73, the next asset, which they will be landing a deal on, and guarantee pretty much they land a deal on this year. It's not a question of if, it's who they'll go with. Because I was talking, I did a chat. Have a listen to Neil Clark C on the podcast this week. It's a 28 million market cap. They raised funds, right? When they announced the deal recently, that 570 million pound deal, they raised funds at a discount. And so that knocked the sentiment of the share price. Now, from January, from December to January, this share price rose from 30 pence to 60 pence on the rumour that the deal was going to happen. So it doubled on the rumour that the deal was going to happen. The deal got done, they raised money, and now we're back at 30 pence again. And I thought, hang on a sec, they've got cash, enough cash until H2 2024. They've got a deal on their first asset to go into phase 3, which they have no financial burden for, and they're going to land a deal on their second asset, which is going to be bigger than the first asset. And yet, this sentiment's been knocked so much. So this thing, and just as a point of reference, the net present value for one asset deal is $200 million, right? Brokers have already put 3 different set brokers, and like the average of the 3 brokers' targets is 280 pence. They are now at 31 pence. And like I said, and Neil says in the podcast, these aren't silly figures. These are, looking at the markets, the pricing of our products in the market, not big market penetration, not overstating anything. So that's almost a 10-bagger right there, based on 3 different broker targets. And that's the way the market is in bear markets in biopharma. But I mean, I think Destiny Pharma, once sentiment changes, at the moment, it needs to get above, I'd say, 32 pence for our RSI to tick up above, like, what is it? We just got the chart here. That one there, if you're looking about huge potential with plenty of cash till H2, over 12 months of cash, and before then, they land a deal on their second asset, which will give them more cash anyway. So I think one of those, some of Destiny Pharma is excellent potential. And literally, it's now below, Paddy's will go. It's now below the placing price. Where are you going, Pad?
Just got to make some dinner. I'm hungry.
You got to make some dinner? What's more important?
We've been talking for 2 hours.
Oh, have we? Oh, okay.
Yeah, I'm quite angry as well.
Oh, angry? Okay. Anyway, so that's why I like the micro crap. Anyway, any other questions quickly? Anything you watching TV? I tell you what I'm watching TV at the moment. It's very good. I quite like it a lot. And I think you'd like this, boys. BBC iPlayer. What's it called? It's
MasterChef.
It's not MasterChef, no. It's called, what's it called? Blue Lines? It's
memorable then.
Yeah. Well, I never remember the titles of stuff, do you? Really? But
I'm trying to sell them to friends, yeah.
Oh, Blue Lights. It's very good. It's about a police force in Northern Ireland, and literally terrorist family there. But they try to change the way things are. There's a bit of corruption in there. But it's very good, very well acted, and you see the problems in Northern Ireland and all that stuff. In Southern Ireland. But it's worth watching. But it's basically 3 police recruits in probation, and you're thinking this is probably the worst place in Northern Hemisphere to do probation in, because there are lots of families involved in terrorism, drugs and all that stuff, which you don't touch, don't get involved with, There's lots of that going on. So it's worth watching. If you're watching tonight, boys, start with that. Blue Lights, okay. BBC iPlayer. It's well acted, Pad. You'll like it. It's a bit gritty. It's not cheesy in any way. It was very good. In fact, in the last few evenings, me and the missus were trying to watch it in Centre Parks. And in the evenings, obviously, everyone's on the internet. So every 30 seconds, we're getting the whirring wheel, It was so hard to watch. Oh. In the end, Megan said, I'm going to bed. So, no, come on, give it a go. I was walking around the room with my laptop thinking, where's the best signal here? It's so annoying watching a drama like that. But even with that, it kept me, watching. So, yeah, it's worth watching. It's very good. Blue Lights.
Could that have been why it was so good? Because you were only watching it in small bits.
No, I watched the first episode at home, and then we tried to continue in Centre Parks, but it didn't really work out. But there we are. But okay. Listen, boys, if you my blogs, I do them every time I make a buy, sell, or top up. I similar have a little read. Because, I think I've done one on Sieta. I've done one on 3 others as well, but I'm not going to mention them because they're under a month exclusivity to the club before I mention them. 3 others are one-on-one as well. But I think, as I bought Destiny for a month back, I think sooner or later it will rally. It's just basically sentiment. Once the RSI gets up to around about 50, and that means a price point of about 32 pence, I think it'll start to rally very strongly. Very strong. And then when you get the suggestions that a deal's going to be landed on the next asset, and it will get landed, it's basically they're looking for the best deal. It's like having a nice house. You can sell the house quite easily, be looking for the best price, and so a deal will get done. And like I said, that will double their NPV, more than double their NPV from 200 million to 400 million, probably about 500-600 million probably. And that means the broker targets will probably go up even further and it'd be over 10 bagger. And it's very rare. You see some broker dollars. Very rare do you see a company where brokers are basically saying this is a 10 bagger on the first asset, let alone the second asset. You know, there are different brokers, 3 of them are saying the same thing. So it's worth a look at. It's the kind of thing you can do very well. And don't put too much in, but if it starts to rally above 32 pence, maybe average up every time you got up by like 10%, add a little bit more. If it starts to rally momentum, and that can really change your portfolio overnight. I don't have a lot of doubt they'll do it. I just don't know when it's going to happen. It'll happen sooner or later, next month or so, I think. It'll do well.
It's in their destiny.
Yeah, exactly. It's their destiny. Yes, and good, very good. DES ticker. Do your own research. This is not investment advice. This is just what I own. I think it'll do well, but it may not. But they've got cash. What's the biggest risk to small cap companies? No cash. They've got cash. They've got 2 assets, late stage, and they're going to do a deal on the second one, which is bigger than the first one, and that alone is almost like an 8-bagger. So the second one will be more. Right, lovely. Steve.
Oh, lovely.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.